Welcome back. You know the drill, lunch of the market. So let's try to make some money. Baidu. This is a high beta stock if there ever was one. Symbol BIDU. We hit a home run with our Google call spread risk reversal. So let's try this again with its rival Baidu. We're looking at getting long the June 2011 100-115 call spread and then selling the June 2011 85 put against it. You'll take in about $3.75 per structure you put on. The max gain is $11.50, and the $375 you got paid to put the trade on for a total of $1,500 and $1,525 between now and next June. Worst case, you get long Baidu much lower than it is right now, 15% to be exact. Not a bad entry point. Of course, should the stock trade down on earnings because of the market or for any other reason, you can always roll your short strike put down and out if you're not ready to buy the stock in June. The market rolls over, don't forget to buy back the short call option so that your upside becomes unlimited at that point. Baidu reports today after the close, so you want to put this one on today before 4 p.m. Eastern Standard Time to take advantage of earnings. Next, Visa. We took profits on our January 2012 55 calls at 56%. When the stock sold off from the 80s into the low 70s, we sought out of the stock and into call options. We're up huge on the trade, so we'll raise some more cash today so that we can afford to be optimistic. No one ever got hurt taking a profit, and today won't be the first. Now, the trade you've all been waiting for, NetFlix. Today we jumped into the common stock and then wrote an at-the-money call against it. We'll call it the flip. Similar to flipping a house, you don't need a huge profit, just enough to make it worth doing the transaction. We bought the stock around $171, $172, and then sold the December 170 call against it for $13.40. So we'll take in $1,340 minus commissions, minus the $2 that it's in the money, and we're looking at making about $1,100 for pushing a few buttons. If the stock rips, then we collect our $1,100 and move on. If it trades down, we'll play it like Apple and keep selling calls against it to create a dividend. If you want to be less risky, you can sell the November 170 call against it for less money, just under $1,000. It's more likely that you'll be called away the closer the option is to expiring when you're already in the money. A note on Bank of America. On the Wells Fargo call, they outlined the numbers for mortgage putbacks. Contrary to popular belief, this is not a new issue. Companies have been taking mortgages back for some time now, and here's how the numbers break down. Let's say someone comes to Wells Fargo with $8 billion in putbacks, and they go and grab the files, and they're able to prove that about 50% of cases it was their fault, and take the loan back. So now we're at $4 billion. Then by working with the homeowners, they're able to bring about 50% of them current. So you're down to $2 billion. Of that, the losses on the properties are about 50% again. So the real liability of $8 billion in putbacks is really $1 billion. If we do similar math with Bank of America and the liability is $24 billion that someone will try to put back, then BAC is really looking at about $3 billion in actual losses. Way less than the headline number, so don't get crazy. As we said to @28 traders, stock bottoms are like boogers. If you keep going in there to get them, all you're going to make is your nosebleed. Just get the big one and see what happens. In a day or two, you can probably go in and pick another big one. Don't ever try to catch the absolute bottom of anything. If you put on your full position when you think you've found the bottom, you're going to get cut by the falling knife. Just go in, grab the big downdrafts, and then wait for another opportunity. We think this mortgage mess is overblown, and if you're patient over the next year or two, then you're going to get rewarded. We like the January 2012 12.5 calls for BAC as a nice cheap way to play the eventual recovery. Thanks for tuning in again. Have a great day, and we'll see you tomorrow.